Leverage. I'm sure you've heard this term before. This is what can turn small moves into big profits or big losses. In this video, I'll break down how to properly use leverage and keep risk management in mind. This is going to be such an important video because that is how you ensure to use leverage sensibly without risking too much money. So stick around and enjoy the video. So what is leverage and why is it so popular, especially among newer traders? Leverage allows traders to control a larger position in the market with a smaller amount of capital by borrowing funds from the broker. For example, when using a 10x leverage. Okay, this means, for example, even when we only have $1,000 in the trading account, we can open a position that is 10x this 1,000. Okay, so this means we can control a $10,000 position with only $1,000 funds in our account. This can obviously increase our profit. So even with a smaller move, we can make 10x the amount of money we would do on a typical account size, which we are only using for $1,000, for example. But that, unfortunately, doesn't just include the potential profits. That also includes the potential losses. So our loss is also going to be 10 times bigger than on a normal position size. Let's say, for example, I want to take a long trade on Bitcoin. This is about a 10% increase to the upside, which I would be expecting for this trade. So that means on my $1,000 account, a 10% increase would be $100 profit. Now, when it comes to leverage, I'm borrowing from my exchange. So if I'm using a 10x leverage, I'm not opening a $1,000 position down here. I'm opening a $10,000 position. And that means my 10% expected profit is going to be $1,000 profit, even with a small account size. So to summarize, leverage amplifies potential profits, enabling traders to make significant gains from small price movements. This is one way you can use leverage, but you have to be very careful with this, as that is obviously increasing your risk as well. So let me explain you how I am using leverage, which is not like most newer traders use it. Say, for example, I want to take 3 trades across altcoins. So I want to take 1 trade on Bitcoin, 1 on Ethereum, 1 on Solana. If I only have a $1,000 account, I have to split this across 3 trades. Now, when I'm using leverage, that allows me to use a very low margin, but still being able to expose myself to 3 different trades. Okay, so that helps me to manage my margin in terms of being able to trade different assets at the same time without having this entire margin in one single trade. Now, what I always make sure is that with leverage, I'm not trying to increase my account size. I'm just trying to split the margin effectively, as opposed to trying to increase my $1,000 account to a $100,000 account, because we can also use a 100x leverage, which I would definitely not advise you to do. But this is the only reason I would use leverage. This comes down to the capital efficiency. So it frees up capital to be used in other trades or investments, improving the overall efficiency of your trading portfolio. This is the best use case for leverage. It's not to increase your position size, it's just to free up capital to put into work on different assets. Opportunities in low volatile markets, this is also where we can use leverage. So if a market is very slow, leverage can help us to at least gain something out of the scalp trade. So for the lower, very low time frame trades. If you want to look at the futures real quick, so on futures, because the moves are actually very small, there is a very large default leverage even. Whenever we are trading futures, this is going to be on a leveraged position, but different than on crypto, you don't have to manage that yourself. So the broker or your exchange is already having a default leverage for futures trading. So you don't even have to be involved in that. So what do traders need to be careful about when it comes to leverage? Just as leverage can magnify gains, it can also amplify losses, potentially leading to substantial financial damage. Besides that, we have to be aware of margin calls. So if a trade moves against you and your account balance falls below your required margin, your broker may issue a margin call requiring you to add more funds or close your position. This is something you definitely not want to experience ever. Also, we have to be aware of risk of over leveraging. Using too much leverage can quickly deplete your capital, because if a trade is going against you on a very high leverage, this is just going to amplify your losses. And especially during volatile market conditions, this is something you want to avoid at all costs. It also has a very large emotional impact. So the amplified stakes of leverage trading can lead to emotional decision making, increasing the risk of mistakes. So when you find yourself in a leverage position that is going against you, if you are in a long trade here on Bitcoin, for example, this can lead to making bad decisions and even adding to the position, because you start to get nervous that this position is going against you and your loss is going to be much bigger than you should risk on a small account size. So how can you manage leverage effectively? I already explained you how I am using leverage to free up capital, but one thing I can recommend you as well is start small. Use low levels of leverage. So you don't even have to use a 10x leverage. Why don't you start on a 2x leverage? This is very conservative, and this is how to get used to using leverage. Also, we want to use stop loss orders. This is something I already explained in the risk management lesson, but setting stop loss orders is even more essential when it comes to leverage trading. Also, we should monitor margin levels regularly. So every day, whenever we're taking a trade, we should be aware of the margin that is necessary. Okay, so regularly check your margin levels to avoid margin calls. And what we want to avoid is over leveraging. So don't ever use the maximum leverage available. Instead, tailor your leverage to your risk tolerance and your trading strategy. So to summarize, leverage can be a very powerful tool that can enhance profits if applied correctly, but it also carries a significant risk. It's essential to use leverage cautiously and always prioritize risk management. So I hope you could learn something in this video and now understand how to incorporate leverage into your trading without risking too much money. Because believe it or not, but leverage is the one tool that leads to so many traders, especially beginner traders, who fail. So stick around, because I'll be delivering 2 of these videos every week to try and elevate your trading journey. See you in the next one, and goodbye.